Okay, guys. Hi, how are you? And before you saw a equity curve that most people want to have, and this is based off of one of our strategies. So today I'm going to talk to you about the Forex performance triangle and how that's your access to high performance in Forex trading. And once you get this principle, it's going to be, I believe it's going to give you breakthrough success. I know it certainly has been a breakthrough for myself and for many of our traders. So let me tell you just a little bit about myself before I go on any further. So, a little bit about me. I'm a Florida attorney and business owner. I haven't practiced law in almost 10 years now since I've been a full-time trader. I've been highly successful in investments in real estate. I've been a full-time Forex trader since 2006. I've worked in Forex strategy development and automation. I currently program in C++, MT4, and also TradeStation Easy Language, which isn't on here. I've worked on joint projects with leading retail strategy developers in the industry, resulting in highly profitable and reliable trading programs. My software has been used by thousands of traders worldwide on every single continent in the world except for Antarctica. And I recently established a leading and exclusive FX mentorship website, tribeforex.com. So let's talk about this. And so what I'm going to do is let's go ahead and take a look at this equity curve really quickly. And this is the equity curve for one of our strategies, actually dating back the first trade was taken at the beginning of March up until present time. Okay, and so this is just one of the currency pairs that we use. We use the euro dollar, the pound yen, the dollar yen, the euro yen as well, dollar Swiss, dollar CAD. So the majors basically is what we generally trade. Is it all we trade? Absolutely not. We look for other opportunities as well. But what makes someone truly successful in this industry is it takes a few elements. And so let's talk about those elements as I get back to it here. All right, so there are three core concepts to trading performance. And if you get these three core concepts, then you will be successful at trading. Now, if you miss any one of these components, you will absolutely fail. You will die a horrible, probably slow death in Forex, and sometimes, a fast death. That's how some people trade if they have no money management. Well, I'm not talking about money management here, although I would say that that's another cornerstone to success in trading performance. Okay, what I'm going to talk to you about are these three areas that if you have these three areas, that you can absolutely be successful. So let's get into it. One is trading integrity. Another is strategy, execution. Those are the three areas that you absolutely have to master in order to be successful at trading. Now, this is obviously very, very simplistic to many of you, but many of us don't have that right. I know I didn't. It took me years to really get all three of the components and to really begin to master it so I could be consistently successful and really have power in my trading at all times. So strategy, integrity, and execution. So guys, here's the reality. And here's how you maintain a level of consistency in your trading. If there is a loss of power in your trading, it comes from a breakdown in one of these three legs. Okay? It's like a table. You lose one leg, then you're going to lose stability and balance in this thing. Hey, George. So look, here are the three areas that you have to be concerned with. There's integrity. Okay, integrity is absolutely fundamental to trading. It's fundamental to everything in life, but really in trading, if you want workability, if you want functionality, you've got to have integrity. So what does that mean for us here as far as trading is concerned? It means that you have to plan your trades and trade your plans. A lot of people come into this industry and they believe that they can, be a maverick, that they can go out there and go with their gut instinct, and sometimes that works, but over the long haul, for a decade-long career in trading or for a lifetime career in trading, you cannot gunsling. You cannot, just shoot from the hip, if you will. You really got to have a plan, and you've got to trade that plan. Now, how does that look? This is a very simplistic way of saying this, because what a plan can be for many people could be automation. It can be algorithmic. It can be, mechanical system. Me personally, I like to use both algorithmic and discretionary trading at the same time, right? So that I can master all three of these areas. All right. So integrity is super important. Some people don't have it. They think they plan their trades and then they're trading their plans, but they're really not. I'm going to get into that in a second. And strategy. Strategy is obviously going to be very important. Everyone thinks that strategy is the number one thing and the only thing that will bring you success as a trader. That's absolutely not true. Using a high probability and low risk proven strategy is important, but you can lose your trades, and you can have a losing account, right? If you have a high probability strategy and you don't have integrity, you don't have execution. So people spend a lot of time on the strategy and they don't spend a lot of time on the other areas, and they end up losing. But honestly, most people don't even have a strategy that works. They listen to someone who says, hey, look, this is the strategy I have. It works. It makes money. And they just go with it. They haven't done any back testing. They haven't done anything else. But I digress. What's the third area that we have to consider? It's execution. You've got to execute flawlessly. If you have a beautiful strategy, right, and you have integrity in your trading, but you do not have flawless execution, which is where the rubber hits the road, it's as if you had a 1,000 horsepower car and only 200 at the tires. But you get what I'm saying? So you can't have, no matter how good your strategy is, if you don't execute it flawlessly, you're not going to be able to maximize the potential of that strategy. And that goes without saying. So let's talk about integrity really quickly. So what I'm going to talk to you about is casinos. Casinos have a tremendous amount of integrity. You're saying casinos with integrity? Give me a break. Absolutely. Let me explain. So the gaming industry racks up about between $85 to $100 billion per year. And what they do and what their whole idea is that they want people to take as many trades, if you will. They want them to gamble as much as possible so that the odds can be in their favor. How are the odds in their favor? Well, the casino industry and their model hasn't changed in years, in hundreds of years. Since casinos have been around and since gaming has been around, they've used the very same systems. They've invented new games, but many of the games that they've been playing for hundreds of years are still being played today, and they're still making money off of them. Why? Because there's a probability, and the probability is in the direction of the house being the casino. That's clear. So the attraction to the gambler is the possibility of winning quick, easy money, yet the casino is raking in all the profits. And why is that really? The universe is not structured around possibility. It's structured around probability. And how is that really going to help you and I today? It's to understand that if we take our trades accordingly with a high probability of success, if we have a strategy with a high probability of success, okay, and we're taking trades as we should, sometimes we're going to have losers. But over the long run, we're going to win this game called trading, okay? And so that's what the casinos do. Sometimes they have a big winner, okay? Someone walks away with a jackpot. But if they keep on taking those trades according to their model, they're going to win. So casinos have a tremendous amount of integrity, $100 billion a year industry in the United States. So that's something for you to consider. That's something I consider every single day, and that's why I'm committed to integrity in my own trading. So casinos entice the player with the possibility of a large short-term payout, but are designed to give predictable long-term advantage to the house. So the reality is that the casino system is a calculated, battle-tested, focused on the long-term profit. The gambler is an individual, emotional, untested, focused on the rush of a few scattered wins. And unfortunately, most traders mirror the gambler, and our key is to become the house. Now look, I'm talking to you about some concepts now, but in the end of this presentation, I'm going to show you an exact system that I have utilized that uses this same model, this triangle, which allows us to continually profit in the markets and to find where there's loss of power in our trading. Okay? So when your account starts going down, it's not in line with the strategy, then you can look at one of these three legs of the triangle and figure out what it is that's causing you to lose, and you can gain consistency in your trading over the long term. And that's what I'm trying to get you to, because that's what's going to make you successful. So the casino model has been around for centuries. I said that before. And regardless of if there's a jackpot winner, you have to become the house. You've got to plan your trades and trade your plan and stick to it. Integrity is the very foundation of your trading. You can have a perfect strategy implemented, and I'll reiterate this. You can have a perfect strategy implemented and still lose because you have no trading integrity. This is actually an account that we traded, and I literally traded this account in front of thousands of traders. Okay, so basically I had hundreds of traders in a live trade room with me, and then we recorded the sessions, and so traders would watch these sessions over an 8-month time period as I took trades. All right, and we started with a $150,000 account. We ended with $344,227.85 at the time of this thing here. It was an FXDD account. They no longer serve U.S. clients, so they gave us over to FXCM, unless I would have given you the investor number. Okay, but that's what we did. You can also see the videos every day, live traded, online and on YouTube. But the bottom line is the only way to make that happen is through a foundation of integrity. Now, I had people who traded this exact system. It was an automated system, okay, completely automated. And like I said, I had thousands of clients who were trading this thing with me, alongside me, okay? And what they would do is what most people do. When price would move, when the strategy is doing well and the people sat out, as soon as it moved to a new high, they wanted to get in and start trading it. As soon as it had a pullback, okay, as soon as it had a drawdown, okay, that's when everybody, it doesn't matter how small the drawdown is, it could be 2 trades in a row, okay, they want it out. And so they get out when price pulls back, and so they get in when price is at its peak, and it's going to pull back because it's got to get back to the median, right? And then they get out on the pullback when it's ready to take back off again if the strategy is healthy. So I'm going to talk to you about how to have a healthy strategy in just a second. Right now we're talking about integrity. But the integrity portion of this comes into play because even with an automated strategy that works, you see what I'm saying? If I go back to the beginning of this, you'll see that we have the 3 legs of the triangle. And even if you have a strategy that works well and you have flawless automation as an execution, there's still a way to destroy your account and your ability to profit. So this is the account, guys. I'm just scrolling through it so you can see that it was a real deal there. And so let's move on from integrity, because integrity is important. I could speak about integrity all day because that's why 90% of traders lose. Let me also say this, guys. Integrity is important, and that's what the market makers use to stop traders from being able to profit in this market. You know why 90% of traders lose, guys? It's because most of them don't have integrity. They don't have the ability to stay in a trade when the trade goes against them. So what the market maker will do is, and this market maker, this invisible so-called boogeyman, he really does exist. And what they do is, and why 90% of traders have failed, is because 90% of traders react in the exact same way. And how do they react? When price moves up in one direction hard, they believe price will continue to move up. So if either they're greedy and they want to get in on the trade at that moment, or they're scared. Fear takes over and they want to get out of the trade that they were in. And then what happens right after that? It's as if someone had a joystick and pulled it against you as soon as you got in on it, on the trade, right? I've been there. I'm sure everyone in this room has been there as well, where you see price moving hard in one direction, and then you get in thinking that it's going to continue to move up. And what happens? As soon as you get in at the very peak, then all of a sudden it just drops hard. It's happened to everyone in this room, I'm sure, at some point or another. Well, only 10% of the world, forget traders, just period, across the board, do not react in the same exact way. 90% of people will react in the same exact way. This is what they do in life, and this is what they'll do in trading as well. And so when you realize that you just have to you've got to plan your trade and just trade your plan, it's going to liberate you. It's going to give you an ability to realize that is the entire model of the market maker, that people will react. They will abandon their trades. They will get in on trades that they shouldn't be getting in on because they see an opportunity that really doesn't exist. It's all reaction based. Okay? I did a course recently that helped me to understand that part of my own psyche and the human nature toward reaction. And that actually improved my trading and really opened this whole performance triangle up to me. So performance is extremely important. And integrity is the foundation of performance. Okay, so let's get that out of the way. So in order to get to that place, and when you have that integrity, it opens you up to a whole nother world. It gets you past the world of gambling to a place of lifetime success, where you can really begin to work in capital preservation. There are 3 realms that all my strategies have to have. They have to give me the opportunity to preserve capital. That means I'm using stop losses. I'm protecting myself against drawdown. 2, there's got to be capital appreciation. What does that mean? It means regular incremental gains in my account. And then it's got to have room for capital explosion. Okay? What does that mean? That means that when the market takes off, as we have a trending market here in the Forex, you've got to be able to take advantage of that trending market. You know, I'm all for the 20 pips a day thing that we have, that a lot of people do. That's fine, but you've got to leave room to be able to take it further, because there's a lot more money in this market than just 20 pips on certain days like today. We were in a euro-yen trade. In fact, we're still in that euro-yen trade that went 180 pips, and we got almost every penny of that euro-yen sell. Okay? And I can actually show that to you. I wasn't going to, but I'm sure that I have got it on a chart somewhere. So how do we do that? Capital preservation, I just said it. We're using stop losses. The strategy itself has to have a buffer against losses. Capital appreciation means that you're taking incremental gains no matter what happens, and then capital explosion. So the last 2 are the ones that people have a question about, and I'm actually going to give you this one for free. This one is what I use and have used for my entire trading career to be successful at trading, to be honest with you. So how does it work? Basically, I take 2 positions every time I take a trade. Okay, I take 2 positions. I take a fixed take profit position, and I take what I call a trend position. Okay, so the first one hits the take profit, closes out, so I get my incremental gain, my appreciation, my capital appreciation, and the second one moves to break even, and then I get to take that one with a trailing stop until the market closes out. Very, very simple concept, but so many people don't get how powerful that can absolutely be. Try it on for size. You may very well like it for yourself in your own trading, any trading. Listen, this model, the FX performance triangle, works for any strategy, hands down, period. Some strategies are better than others. That's just the way that it is. But it works for anything that you decide to hook it up to, or to use it or apply it to in your own trading. Any market, it's going to work there. So strategy. Let's go on to strategy really quickly. So integrity is extremely important, especially when you have to deal with a market maker who expects that most people will not have integrity in their trading. They won't stick to their plan. Okay? So it tries to get people emotionally involved and gets them out of trades. Okay? He'll drive it in one direction and then slam it down in the opposite direction, and it seems as though he's looking right at your account. They're not looking at your account. They're looking at human behavior. They're expecting for human beings to behave the same way, because that's what they do. Okay? So you got to be in the 10% when it comes to that, and really just when you have a strategy that works, really give yourself to it, and work that plan. Okay. So the FX performance triangle strategy. So let's talk about strategy. So I'm a strategy developer. I spend a lot of time developing strategies, algorithms, that sort of thing, and I've been doing it for many years now. So here are some of the basics of a strategy that are absolutely important to you, you know, having a successful career in this market. And this is, any strategy you have has got to have these elements. All right. Obviously, it's got to have a higher probability. We know that. You're also going to want a strategy that has lower transaction costs. So you're going to want a broker or currency pairs with lower transactional costs because you will end up paying for them in the end. You want high profit ratios. Okay. So what we call high profit factor. If I go back here and I actually go to the performance summary, you'll see that this particular strategy has a profit factor of 3.68. That means for every dollar that I risk, I'm more likely to make $3.68. That's the average. $3.68 is made for every dollar risked. How am I able to do that? It's because of that same model I just gave to you of using two positions. One is a fixed position, and the second one is a trended position that continues to run, so that gives us an opportunity to make more profit over the long haul. So $3.68 for every dollar risk, $3.68 is made. Now, if you get over a profit factor of over 2, that's a good place to be. Okay, I like my profit factor to be right at 2. I don't like it to see it below there. 1.95 is okay, but really 2 and above is really where I want to be. Right? So for every dollar I risk, I make $2 at least. All right. So going back to the presentation. Okay. So you don't want to have to deal with the unlikely incident of slippage. All right. You want to deal with slippage. So I build slippage blocks into my trades. So either I don't trade at major market events, or I add slippage blocks, which means that if the market is at least 3 pips or more than 3 pips above where I wanted to get in, it just simply won't get into the trade. And in my testing, I always use highest quality data, usually TradeStation. So here's the reality, guys. The critics say that past performance does not guarantee future results. But then everyone uses technical indicators which work off that very same principle that past performance basically is indicative of future returns or future results. So, you know, obviously past performance is not necessarily indicative of future results. We know that, but there's a probability. History repeats itself, and the markets will behave in the future in the same predictable way that they have behaved in the past. So what generally happens for us is that, you know, if you go off of this model, then you won't use back testing. You'll just, you know, gunsling. You'll be the maverick. If you are that maverick, you are going to be led to the slaughter eventually. It's an eventuality. I've been there. I've done it. It wasn't until I got into the markets, believed in some hypey guru who told me that I was going to make money if I just followed his plan, gave him a large sum of money, and then began trading live. It's when that happened, and I actually had a loss, my first big loss. Okay, because we weren't using stop losses or anything like that in his model, in that model. And what happened was I ended up losing money because I really didn't understand the model itself. I understood the model. I did my research and I studied for it, but I didn't understand it because I didn't have adequate back testing of the model. So back testing is supremely important. You've got to have back and forward testing to be able to really understand the strategy that you're using. Okay? So what am I talking about? I'm talking about the kind of results that I just showed you on my TradeStation there, so that you know what the predictable long-term gains will be. You understand what the profit factor is. You understand what the win ratio will be over a given period of time, a few hundred trades. Okay? You also understand what the drawdown will be. That's absolutely important. If you don't understand these concepts in your strategy and you have no mechanism, no structures in place for you to know that, have that intimate relationship with your strategy, then you're going down the wrong road. And that is not a career, and that's not being professional. You want verifiable, strong, back-tested results, and then obviously probable, strong, forward-tested results. Okay? That's probable. Now, we can't guarantee that back-testing is going to be forward-testing as well. Or live trading, but if that there's a probability there that the back testing will show show similar results in the live trading, and that's what we found over time. That's all we have to go off of. That's all we have to go off of. So back testing should be the bedrock of all strategy development or any strategy that you decide to trade. And if you can't back test it and you don't have back tested results, request them from anyone who is giving you the strategy. And if you can't find those and they don't have that for you, then walk away. Walk away. That's it. It's your money. It's your life. It's your time. Don't waste your time. So let's put it all together. I actually had, so to determine what's important for a strategy, there are actually 5 rules that I employ that I require for any strategy that I use. Now look, I still learn from other people. All right, I've been trading for almost a decade now, full-time trader for almost a decade now, and I still learn from other people. I will always learn from others. There's always something to be taken from other people, okay? Period. Right now, I just paid $3,000 for a course on fundamentals, and I'm not a fundamental trader. I know fundamentals, I look at them, but I will learn from other people. Now, my strategies, however they're employed, it's fundamentals, but they also use technicals as well. I will always learn, and you will as well, if you want to continue to work in this. As a lawyer, we have continuing legal education. As a doctor, you have CMEs, continuing medical education. So that's the way that it's always going to be if you're in anything that you're doing. But you want to make sure that these elements are in any strategy that you decide to pick up and learn. All right. So first of all, let me say this, that after having learned these rules in the school of hard knocks of trading, and thousands of hours of trading and programming, and obviously tapping into technology of automation and backtesting, I've come to these conclusions as far as what strategies need, and I'll be quick about it. It must work on a higher time frame. Big money does not look at lower time frames. I don't care what anyone tells you. The big money does not look at lower time frames. By the way, I hear about this high frequency trading, and there's nothing wrong with that. I'm not knocking it. I think high frequency trading can absolutely work as long as it's based on the higher time frames. Okay, it's got to be based on the higher time frames. All right, the trading decisions. Because to be honest with you, I met with a Goldman Sachs bigwig, actually, I would say about 3 or 4 months ago, who wanted me to be a part of their organization, and they don't make money. Their trading division doesn't make any money. I bet you didn't know that. Do some research. You'll find out. But they don't make that. They don't make a ton of money, right? So just be careful, because they make their money off of the transactional costs. But big money doesn't look at the lower time frames. All right? It looks at the upper time frames. If the basic concept does not work off of the higher time frame, just go ahead and forget about it. It doesn't mean that I don't trade from the lower time frame to get better leverage. It just means that I make my trading decisions from the higher time frame. Rule number 2, it's got to be consistent. It must consistently take profits and limit drawdowns. And I told you before, I prefer high win ratios to high yield trades. So some people will I'd rather get into one trade, lose 6 out of 10 of them, but get into the one trade that goes for 100 times the money or 10 times the money or whatever it is. Okay? I have trades like that. I've designed trades like that. I don't like them, because what happens if that trade doesn't come before you run out of money? What happens if you don't have the integrity to hold on after you have a 50% drawdown? Who wants a 50% drawdown in the first place? You may get lucky. You may come right away. You may get that trade right away. But you want to have a trade that has a high win ratio, right? So, for instance, the trade that I just showed you, not only did it have a high profit factor, this is the trade that we're trading right now, but it also has a pretty high win ratio of 84.44%. Okay? So about 84% win ratio, 84%, as you can see right here. Over 135 trades. Now that number can fluctuate. As long as you're above 70%, you're fine. 84% is a great number to be at trading at, getting at high win ratio. So if I can get a high percent profitable and I can get a high profit factor, that's what I want. That's a good trade, and that's going to do well for me over the long haul. So it's not, guys, this is not magic. There's a formula to success as far as this is concerned. So let me continue. Rule number 3, it must control drawdowns. Drawdowns have to be controlled. So there's got to be some structure in place for that, for drawdowns to be dealt with. So there's got to be risk control. There's got to be money management. Some people like to use lots. I don't use lots personally. We have our software automatically. It has it will take percentage of a trade, 1%, 2%, 3%, whatever else it is. Okay, it takes percentage of an account because that's what's going to keep you safe for the most part. You know, it also allows you to take lot size, so you can bypass it and say, hey, I just want to take one lot on this trade, and it will automatically execute that trade as well. But there's no control over the loss in that scenario, depending on the stop loss, because your stop loss may be different. Something to consider. Rule number 4, it must be adaptable and flexible. So it must allow for the ability to take advantage of the trending nature of the market. Now, we talked about that. The Forex is the most trending market in the world, the most trending market in the world. It's got to be adaptable to a point where it's able to take advantage of that trending. Okay? Can you imagine how many times have you gotten into a trade where you had a fixed stop loss, fixed take profit, and let's say that you were going for your 20 pips, and on this euro yen that we just had today, that euro yen went off for 180 pips, and you're sitting there with 20 pips in your pocket, and you're happy with your 20 pips, but you're like, man, there was 180 pips that I just left on the table, or 160 pips that I just left on the table. It's happened to all of us. You want it to be adaptable and flexible to the market to be able to take some profit as the market continues to trend, because the market does trend. And lastly, you've got to always use stop losses. I kind of told you, but I didn't really share it with you. I had this strategy. I was trading my nest egg. I was doing very well at the beginning of my trading career, and I was doing a lot of carry trades, right? And the carry trade was doing phenomenally well. If you guys have been trading for long enough, you know what the carry trade is. There's a disparity between one currency and the other as far as interest is concerned. And so you'll see this one currency was the pound against the yen mostly. Pound had a high interest rate, yen had no interest, right? And so what you would see is that the pound would continue to trend up and the yen would, continue to get weaker because of that disparity in price of value. And so what happened was all you had to do was buy that thing, and it would drop back and it would come back, and you didn't have to worry about it. So the deal was that was the carry trade. And then one day the balance was upset, and the pound and the yen, they changed interest, and it wasn't as attractive anymore. And then we had the unraveling of the carry trade. And then all of a sudden, instead of continuing to move up and up and up, it just started to drop. And when it dropped, it plummeted. So if you didn't have a stop loss in place, you were going to be completely destroyed, right? And that's what happened to me, and it happened to a lot of other traders as the carry trade unraveled. And after that day, and the people I was following, they didn't use stop losses, had a high win ratio, but they didn't use stop losses, right? So now I'm always wary. When you see someone with a 90% win ratio, you ask them if they're using stop losses, okay? If they're using an actual fixed stop loss. Because you can have a high win ratio if you just leave trades open, waiting for them to come back to a winning position again. And there's some traders and also some money managers who you've got to be careful for. You got to look at their accounts and make sure that they put a stop loss on every single trade. So if you see them with no losses or very, very few losses, you've got to be able to look at that and say, are they using stop losses? Because they can let that thing go, 500 pips negative before it comes back, if it ever comes back. Or at the end of the year, they end up closing your account, and you close your account out for a major loss. So be careful with that. Stop losses are very, very important because you don't know what's going to happen in this market. None of us do. Past performance is not indicative of future performance. We don't know that. Just like that carry trade, it never happened before in my career, but it can absolutely destroy your account if you're not using stops. So that's what you got to think about. Use stops at all times because you don't know what the market's going to bring to you at any given time. Okay? The dynamics, the fundamentals can shift just like that one day. And you can go to sleep at night, you can wake up the next day, and boom, your account is decimated. All right? So be careful with that, especially when you're trading other people's money. You've got to be so careful. So how do I know that these principles work? I've lived them, and I've also automated and back tested them, and I've optimized them, and I've traded them all live. That's how I know. Okay, so this is the strategy that you actually saw from March to current time. And this is actually based off of a $10,000 account, and it's not perfect. You can see that there are dips in it. I can go back to the live one. That's probably better. Okay, so you can see that there are dips in it. There's some drawdowns and stuff and that sort of thing, and that's going to happen. There are going to be slight drawdowns, but I know what those drawdowns are, and they are predictable. Okay? And that's what you want to be a part of. You want to know what the drawdowns are before you get into it. You want to know how much yield it usually brings to you so that you're comfortable wherever you are. That's where integrity and strategy come into play. You've got to know your strategy, and you've got to have integrity to be able to trade it. Okay? So having said that, that's strategy. This is actually before. This is actually the same strategy, but it was earlier. All right, so this is the updated, what you saw live is the updated version, and this is just the PowerPoint that I used from last week or the week before. Okay. All right, so let's talk about execution. Execution is supremely important. Me personally, I don't like to manually execute my trades. And I'll tell you why, because I'm fallible as a human being. Your adrenaline is pumping, it's a big trade. You're second guessing how much your money management is supposed to be, if the lot size is right, if you're getting in on the right trades, I don't want to deal with that. If the pattern is right or whatever it is, if your trade rules or if you're really executing based upon your trade rules, I don't want to deal with all that. Execution is so supremely important though. And so without execution, you could have a perfect strategy and you could still lose money because you're not executing at the right entry, not using the right stop loss, not using the right take profit. Now, me personally, I like to use both a discretionary trading and an automated model as well. So I should actually not be discretionary versus automated. But let's talk about them both here. What is automation? Automation just means having machines accomplish tasks typically performed wholly or partly by humans. So if you're in this course, and this is for not for the guys who've done this for a long time, but for people who don't know what an EA is, an expert advisor, it is this. It's automation, okay? And it's going to take those trades for you instead of you having to take them for yourself. So the benefits of automation are clear. They allow us to design efficient trading strategies and flawlessly execute them. They give us consistent control of our trades. They remove emotions from the equation. The results can also be back-tested, and you free yourself from the computer with reliable robots. I realized for myself that I was not supposed to, and I did not need to trade like this every day. I did not come into the market in the Forex so that I could spend all day in front of my monitor. All right, I've been doing this for 10 years almost, for almost a decade. And I'm telling you, I've spent thousands of hours in front of a computer screen just because I wanted to, okay, because I enjoy what I do so much. At the same time, I also realized that I wanted a balanced life, and I got in this so I could be free. So although I'd like to be there, it doesn't mean that I want to live my life there, okay? I want to be able to take trades when I want to. I want to spend time with my family. I want to travel. I want to, sleep. This is a 5.5, 24-hour-a-day market, so I want to sleep too. That's something else that you've got to consider. So those things, automation allows us to do that. Now, discretionary trading, for me, I've traded, I don't know, countless, maybe a few hundred strategies over my career, and probably more than that because some of them don't work. I've probably done 1,000 strategies, and 200 of which have actually made money, right? But discretionary trading, nothing beats discretionary trading. Discretionary systems are easily adaptable to new market conditions, As the market shifts from trending to range bound or the converse, the discretionary currency trader is able to quickly change trading conditions or his trading strategies. The discretionary trader attains the market feel. This trader must constantly analyze the market before making trading decisions, thereby gaining a more intuitive feel for the market and which trading signals have a higher probability of success. This gray matter between our ears is much more powerful than any CPU I've ever seen, that's for sure. And the reality of the situation is that there are conditions that are not taken into consideration with EAs mostly. Now, you can feed fundamentals into an EA. You can. It's just not as streamlined, if you will. So when I understand that the fundamentals of something have changed, then I'm not going to, if I know that the carry trade is broken up and that the market wants to sell and the sentiment is a sell, then I'm not going to look for any buy opportunities. I'm going to be looking for sells. And when those buy opportunities come up technically, I'm not going to take them. That's why it's so important to have that discretionary trading ability as well, because although the automation can do a very good job in most conditions, you've got to be able to shut it down when it's time. So let me just show you a quick clip of what it looks like to trade using my hybrid methodology, which is using discretionary trading with automation. And so what it does is, and what we like to do here is that I do a trade call once per day on different currencies on the 9 majors. And what do my traders do? They simply take a line and they put it on the chart. That's all they do with the automation. And the automation looks for trades at those areas, looking for either, for a trending opportunity or looking for, it knows what to do at that point, and it looks for the optimal place to get into a buy or a sell. It looks for the optimal leverage, and it takes those trades flawlessly. So let me show you what that looks like.
Hi everyone, and check out this trade now. It is August 5th, 2014. On August 4th, 2014, we made a trade call, dollar yen sell at 102.85. We actually won all of our calls today, but I'm highlighting this particular trade. Now, I'm also highlighting our software. This is the Tribe Forex Auto Rev. We were looking for a trade at 102.85. Price got up to 102.85, and it triggered our Tribe Forex Auto Rev based upon the criteria that we set according to our methodology. And it's gotten us into this trade and pushed us all the way down here. We are up big profit here on this dollar yen sell. Okay, and you can see that the market moved down in the direction we thought it would. Our Auto Rev got us into the trade. It managed to trade, has us in profit, and is currently managing that trade to get us out at an optimal level. Guys, that is the Auto Rev. This is tribeforex.com. Join us.
All right, guys. So that's actually not the slide that I wanted to use here, but basically what we do is I send out a daily analysis every single day, right? Every trading day, or I should say Monday through Thursday. Okay. For trading Tuesday through Friday. And basically you just take a line, put it on your chart, and that's all you do. So basically you can do this in 5 minutes or less. So the gray matter here, which you will learn by being a part of our community if you were decided to do it, or if you're already a pretty good discretionary trader, it allows us to determine the direction of the market, whether it's going to be a sell or a buy bias, whatever it is. We throw it on the chart, and now the software is going to look for the highest probability entry. It's going to look for confirmation of that buy or that sell. And that's what's going to get us into those high probability trades. And that's how we're able to do this here. Okay? So, going back to our deal here, actually, let me show you. If you want to know more about it, and you can go to Profit Formula, tribeforex.com/profit formula. You can also ask me any questions that you may have, and I'm actually going to show you just one more video that shows the entire process. In fact, you know what? Let me show you my website. I'll show you the website, show you how it all goes for us using the same methodology, okay? And the methodology again is, let me know if you guys can see that. The methodology here is, you got to have integrity in your trading, number one. Even with an automated strategy, you have the ability to turn that thing off, okay, or not take trades when you're supposed to. You have strategy itself. The strategy has to be high end, and you've got to be able to find, profit factor. You've got to know what, the win ratio is, and you have to know that it actually makes money. And obviously, execution is supremely important. So here, this is our Tribe Forex website. This is an example of how all this comes together, okay? So basically, it'll tell you what your wins and losses are. And this is actually September 3rd from the calls that we made on September 3rd, okay? Looks like they updated it. So we made certain trade calls on September 3rd, which were taken on September 4th, okay? And so you'll find these trade calls here at the end of the trading day, which is at 5 p.m. Eastern Time. So right around 6 p.m. after we've analyzed it, we'll put the trade calls up here. So we had a Euro-Yen sell, New Zealand, Aussie dollar, dollar yen, and a dollar Swiss. Now, the dollar Swiss is coded in red. That means that it lost, okay? And so what also you also have the video. And this is where I will say, these are our trade calls for the day as well. You don't have to watch it, but you can get the trade signals. So then what happens? Then you go to your chart. I'm going to go to my chart right now so I can show you. Let me know if you can see my charts. Okay, there we go. All right, so you go to your chart here. You can see that we're in this Euro-Yen sell, by the way. Beautiful sell here. Made some big profit on this trade. So we can go to the Euro-Yen. Say that was a Euro-Yen sell. Then we can go down to the 15 minutes. So now that we've made our trade calls based upon the higher time frame, now I'll go to the lower time frame. I'll open a new chart here. Get rid of this. And I'll put my auto rev on. That's it. So that's it. Okay. All right. So then what I will do is I'll go down to the 15 minute. And then all I have to do is put a line on my chart. Let's use another currency because that one's already in a trade. All right, so I'm just on my chart here, okay? All I have to do is put a line on my chart where we said, okay, we're going to look for a sell. So it would have been up here at the top here. You can see that. And I just simply hit auto sell. Now the software is going to look for an opportunity for that sell. I'm done for the day. Okay, that's all I have to do to stay in integrity in my trading. Continually take those trades. I can adjust my balance, my trailing stop, my TP factor, my SL factor, whatever else it is. It's going to look for certain factors that signal that it's a high probability trade, and it's going to get in on that trade when it does occur. Okay, when those high probability factors find themselves, that criteria is met. All right, so that's what basically happens. That's all you do as far as that's concerned. So I think I have a video. And this is what it looks like. Well, that's actually the wrong video. It's just showing my traders how to use the auto. Right? If you go to the profit formula, Tribe Forex profit formula, you'll see a video there, and it'll show you the exact process. You know, we'll say, I'll tell you, okay, get in at this price area, and you just simply put a line on the chart. The auto rev will look for opportunities there, and it will take a trade there. And that's basically how easy it is. Now, some of you will go against what I have to say as far as what I believe where price is going to go, and that's fine by me. What you're going to want to do is that you're going to want to just simply use the auto rep for whatever decisions that you want to make in trading. You can use it on any currency pair. You can use it anywhere that you want to. It's for people who really don't have a trading acumen, right? Who aren't there yet. They want to earn while they learn, and so by putting that on their charts and taking my trades, they can make money while they learn how to find those trading opportunities for themselves. So I've kind of shown you a lot of things, and if I can go back here just a little bit to the beginning where I had my performance triangle here, it really comes down to these three areas. Strategy and execution are actually easy. You can get that from me. You can get that from someone. Okay? Now integrity, I can't make you keep, even if you had an EA that you never had to touch, when people will most likely turn them off. Some people have money managers, and the money manager, when they're in a drawdown, they take their money out from the money manager, right? And then when the money manager is in profit, big profit, then they want to join the money manager again. If you're dealing with a money manager who is kind of like our strategy, who has done well, all right, historically, has a good track record, then you're going to want to stay in with that money manager. You can't stop somebody from taking their money out, and you can't stop someone from, turning off their EA. That's the reality of the game. So integrity and trading integrity is something that we all have to find for ourselves. But all three components put together, they strengthen each other. If you have a winning strategy and you already know that your strategy is winning strategy, you'll have more integrity. If you obviously if you are able to execute well that strategy that's already working with automation or manually, it's going to increase your confidence in the strategy, and it's going to give you more of an impetus to have integrity in your trading. Okay, so it all comes down to that. I can give you these two. I can give you the strategy, and I can give you execution. At the end of the day, it's going to be up to you to have trading integrity, because that's what the market maker expects. Okay, no strategy in the world is going to make you a winning trader, if you will. It requires that third component, which is going to be trading integrity, and that's something that you can learn in our community. Okay, and that's something that you have to get for yourself, and you have to pull towards you, but it's also something that you get in your trading community. And that's what we have here. We've got hundreds of traders who trade with us from all over the world. And by trading with them and seeing the trades that they're getting into, it helps you to have more integrity in your trading. You can even find an accountability partner who will trade with you and make sure that you stay, on your trades. Now, just to give you a little bit about TribeForex.com and the actual website that we actually have a FX training center. And in this training center, you have, this is just a quick start guide, but you have all the software downloads, the indicators, the 3 software packages, 3 EAs that we actually give you here. You actually have the strategy itself, which is laid out for you. And let me show you that. This is actually the auto bias. We didn't talk about that one. Let's see if it opens up for us. And so you can look at the strategy yourself and see how it's performed. This one's 81.25% win ratio. You can see how much it made monthly, okay, up to the point that we were at. You can see the percentage profitable. We had 100% win in July. We only had 62.5% in the month of May win ratio, okay? You can see all of that for yourself. You can see the equity curves, how much it's made and how many weeks were losing weeks. Sometimes you had losing weeks. You need to understand that. If you got that, then you wouldn't be freaking out when you had a losing week, right? So I give you all those tools so that you can be able to make your own decisions about your trading. We also have tons of resources here. We have a newbie training just in case you've never traded before in your life. and you want to be able to get started. So it's just a get started guide here. Ultimate Trading Course, which teaches you everything, all the principles of how the strategies work and why the EA would take the trades that it would take at an optimal level, what an optimal level means for it. Okay, that's important for you to understand. We have continuing education training where I will actually get in here and I will, we will isolate one particular area and we will, give you training on it so that you become a master. Of course, none of this is necessary if you don't want it. FX case studies, that's when we take trades for the week before and we analyze those trades, winning and losing, so that you can see what you are doing right and what you're not doing right with the automation or if you manually trade. Our market analysis, our daily market bias, that's the videos that I put up every single day which show our trading signals. And this actually is just the text of the trading signals, right? And so you can see them. You don't have to listen to the 5-minute video. You can just go here and you can see the trade calls. And I'm actually bringing out a text. So you can actually get all the trade calls by text to your phone so that you can obviously just, if you're on the go and you have your MetaTrader 4 on your portable on your phone, then you can simply just put the calls in yourself, or you can, go on your computer, know that they're ready for you at that moment, and set up your automation to run for you. So many different ways for this to help you in your integrity, but mostly to have a community of traders who are right with you as far as that's concerned. You have questions, senior traders are right there with you to help you trade. We know that they're seniors. You can look at their point count. Everyone's got a ranking. You can increase your ranking over time so that you know who is who's been on the website, who knows what they're talking about, who doesn't, that sort of thing. All the training and the tutorials are right here. You can comment on them. It's kind of a Facebook-esque website where people are able to share with each other and really be able to get support. Okay, and that's going to help you to have greater integrity in your trading when you see other people trading well. Here's actually a screenshot from one of our members showing their euro yen trade. Okay, you have a sell right here, and you can see that price dropped all the way down. That's the kind of stuff that you want to see, and that's what you want to be. That's the kind of community you want to be a part of. You want it clear cut, and you want to be able to count on the people and always have support around you so that you can trade effectively. All right, so when you get an opportunity, guys, go to tryforex.com/profit formula. There's a video there that shows the exact process that I just detailed to you right here, okay? And, just have at it. I hope that there's something here that I gave you that was of value. I think there are a couple of questions that we have. So let's go. Let me answer a couple of these questions. Is the high time frame longer or shorter? Higher time frame is longer. So you're talking about, higher time frame means it works off of the daily, the weekly, or the monthly time frame. Okay. Sometimes I like to use a 4-hour. For a long time, I did a lot of my analysis off of the 4-hour. But mostly the daily, the weekly, and the monthly. If you can make your trade calls from those areas. I've been calling a sell on the euro dollar since March, maybe, of this year. We had tremendous opportunities there. We knew it was going to hit a high there, and all you had to do was buy then and hold on, and you would have made a ton of money. Okay? But that's not the kind of trading we do. We do a lot of short-term daily trading, close at the end of the day trading. You can do either one, both sides of it. But you make your decisions from the higher time frame, then you come down to the lower time frame, the 15-minute, the 1 hour, and you trade those using the automation so that you can leverage and get bigger profits. Okay? Another question is, do you buy puts or calls to protect your position? No, we keep it very, very simple here, so that you can use a simple MetaTrader 4 platform, and there's no need to protect your position. The position is actually protected by your stop losses, and the high probability strategy that you're employing at that particular moment. So that's those are good questions. I love that question, but it's an intelligent trader's question, but it's not needed. It's not necessary. We don't use puts. We don't use calls. We don't hedge. We don't do any of that. We just use high probability strategies and use proper execution. And we also have a way of telling when a strategy breaks, because strategies do break. Okay? When a strategy breaks, you've got to know when that strategy is broken so that you can switch out of it. And so we also do look at that as well. Here's a good question. Does trading integrity increase with the knowledge of how the market is structured and then defining the strategy around them? Man, you guys are a smart bunch. I'll tell you that. That's a really great question. The reality of the situation is when you understand, first of all, integrity is integrity. It's when you say what you're going to do and you do what you say. Okay? That's the reality. That's integrity in life. A lot of people don't have a tremendous amount of integrity in life. Okay? And that's something I had to check within myself, my own integrity. So it's saying what you're going to do and actually doing it. So you don't need knowledge to be able to give yourself to your word, to be able to do what you said you were going to do in your trading or any other area of life. However, great question, because when you have an understanding of how the market works, the market makers move, the flow of the market, what's really moving it, then it does fortify, it concretizes the knowledge base that you need to be able to do what you say you're going to do. So if you understand that the market maker is pushing price up hard in one direction so it can have a turn at this particular place, and with my trading system you will learn, or the trading course, you'll actually learn what those places are. We call them pods, points of decision in the market, where the market will turn. It's got to make a decision whether it's going to turn down, it's going to bounce off this area, or if it's going to break through that area. We call them points of decision. So as you see more and more points of decision being hit and the market reversing at those points of decision, using those points of decision as a place to make big moves, it's going to definitely increase your evidence that the market works in a way or another. At the end of the day, though, guys, the people who are in this market for 20 years and still don't profit, it's not because they don't have knowledge. These people are very, very smart. It's not about knowledge. It's about integrity. I'm telling you. They've seen every strategy in the book. They probably figured out ways that they've had tons of practice at execution, even if it's manual. It all comes down to their integrity, their ability to stay in the trade or to get into a trade when they're supposed to, according to their own rules. So that's what I really believe, and I think that if people take on integrity in trading, that they'll be extremely effective. So that means, making a decision and really sticking it through. But you've got to have a strategy, just like you said. I mean, they all go together. Because if you have a strategy that you believe in and that you know how functions, then you're more likely to stick with the trades that you take and not get out of them. And obviously, I have an understanding of how the market maker works. I have an understanding of how the markets work. And so it's easier for me to have integrity because I've designed strategies that I know actually function. I know they actually work. And so what I'd recommend, if you ever decide to become a tribe member, right now we're accepting people into our community. If you ever decide to become a tribe member, that you take this strategy and you back test it yourself so that you have your own confidence and your own conviction in that strategy. And your confidence in that conviction is going to allow you to trade it well. And of course you can use, I've got strategy reports there that you can also utilize to back up what you're learning in the courses. So there's a tremendous amount of support to undergird your own integrity in what we're doing. Look, I know that, getting a strategy, I say getting a strategy is easy. It's not that easy. There are a lot of strategies that just don't work out there. It can take you months, it can take you years to find a strategy that actually works, right? That actually works over the long haul, right? And you want to be responsible for that. If you want to spend that time to develop that, then you can. Or you can just come to us and we can give you a strategy that actually works, and you can probably develop your own off of what already works in the markets, okay? Execution-wise, yeah, you can execute manually, and some people have the discipline to be able to execute properly manually, and they have the mindset to be able to do it and the mind for it, because you've got to be able to find the lot size immediately, quickly, and be able to get into those trades very quickly. But you don't have to. We have automation for that. And of course, trading integrity, like I said before, it's going to be into you. You've got to pull it towards yourself. It's a decision that you make. Now, obviously, being a part of a community with people who are like-minded and who are taking trades all the way around you, it's going to help you to be that much more in integrity, because it's going to be like black and white. It's like, white chalk on a black chalkboard. When you're not taking the trades that everyone else is taking, then you got to look at yourself. And you know who the problem is. It's you. And then all you have to do is make an adjustment. That's all. No morality, no feeling bad about it, just really making a decision that you're going to be in integrity in your trading and just standing with that. That's all it takes. And that's what a community will give to you, to allow you to see what actually works and to actually trade it. So I recommend you guys, this is actually, someone asked what the cost is. The cost is $397 to be a part of TribeForex.com. It's very, very cheap. I've never sold anything this cheap, but I do want my community to be in place. And it's $97 per month. So it's $397 and $97 a month. You're getting 3 high-end EAs, mind you. You're getting an entire trading system, and you're also getting the bias analysis. The $397 buys you into the Tribe membership. The $97 per month keeps you there, okay? And it allows you to get all of the daily bias analysis. You get support, unlimited support from us, and obviously, you get complete use of the EAs and all the resources on the website. Okay? So that is pretty much my presentation. I know that you've got a lot of questions. I see a lot of questions still here. I promised you guys I'd get you out in an hour, basically, and it is now 2:09. We started right at 1 o'clock. So I'd like to keep my promise there and let you guys go. TribeForex.com/profit formula. All right, that's going to take you right to the model of how this works. Okay, and I will also be placing this recording on the very URL that you signed up for. So it's going to be TribeForex.com/ what was it? TPT, I believe. Yeah. All right. So with that, guys, I will talk to you hopefully soon on the inside of our website. If you have any questions, send them to info@tribeforex.com. All the best.